Welcome to The New Next, a podcast that addresses current events and how they will impact the future. Co-hosted by the inquisitive public speaking champion, Mike McVeigh, and energy, economics, and technology expert, Matt Jensen. Join us as we explore all things energy, economic, tech, and political, and how they will affect our future. Some of the other questions about that, but this does play into something that has been happening, at least locally for us, but I believe nationwide as all for us all. But gas prices in Oklahoma City have dropped. I believe last week when we talked, we were around somewhere between $4.50 and $4.60 a gallon. Now I've seen it as low as $4.10, but pretty standard for about $4.28 to 32 cents.
Yeah.
So will this drop stay, Matt?
We will see. So the API, the American Petroleum Institute, and the Department of Energy produce basically stocks at different areas in the United States. Like kind of, for instance, Cushing here in Oklahoma is where West Texas Intermediate was priced. There's a large storage network there, but we had basically a crude oil build, which means that more oil was stored than was essentially drawn out for refining in this week. So that was printed today. The DOE's tomorrow, and sometimes they're way off from each other.
Right.
So it's just a crude estimate, pun intended. But
we're here all night.
Yeah, so we've seen a drop, and like we talked about copper prices recently as being an indicator of recession, and copper prices have predicted, like I looked it up afterwards, like every single recession that we've had. So there's a lot of elements like this where something goes down, but it's more of, I would say, kind of a financial trade off of financial commodity instruments and stuff like that than it is necessarily indicative of the broader market. So oil prices have fallen. With that too, we discussed last week about how refining in the U.S. is running basically at record highs. So it's who knows, right, where gasoline's necessarily going to go. I think it was Citigroup that said that they thought that due to a basically catastrophic recession that they saw oil going for $65 next year. And then you also had JP Morgan.
What's it about right now?
Well, $65 a barrel. And it's right now it's at like 95, 96.
Okay.
So it's dropped from 110 to 95, 96 pretty quickly.
Right. I just, whenever we talk about the price of a barrel, I think it's always good to at least compare it. So that way we have, because I would say personally, based on my Mike gut feeling, that prices are definitely going to go down. I don't know if they're ever going to go back down to under $2 in Oklahoma, like $1.50 and stuff, though who knows? We said that before the pandemic and it went down to almost $1. I do think it's going to be somewhere between like the $2.50 to $3 range. And that's going to be kind of like the new price point. That's just a Mike feeling that has nothing to do with science or economy studies. And if I'm wrong, use up your gas to come tell me about it.
I disagree with you. Just because it's like there's been a huge underinvestment in, so I think it's trading, and like I said before, it's not necessarily indicative of the stuff. When you had crude oil price drop dramatically in 2014, 2015, it was a 3% global oversupply, which is very minimal, essentially, that caused it to crash. And I just I think it's definitely stimulated more investment in producing oil and gas, and we are seeing like crude oil builds, but there's some fundamental, I'd say, issues in the whole supply of it and funding of it that I think is essentially going to keep it higher than it would be otherwise. So
you're going to guess about $20 a gallon?
No.
But you got to give a number. I don't care if it's made up on the spot. You just have to give a number.
Yeah, I could see it going both ways. So, which is,
are you a politician by any chance?
well, it just depends. Like if this is a really bad recession and people stop buying stuff and there's like a total lack of demand for things, there's a lot of like interesting stuff going on. Like there's for trains in the US, there's a there might be a huge strike in the next couple of weeks, which would essentially shut down a lot of trains in the US. So that would put materials on trucks instead of trains. You have like what's going to happen with global commodity flows. OPEC's consistently unable to meet their targets by 1 million barrels a day. So even though they're saying that they're going to get this, they're not producing that much. It's just there's a lot of ways where it could go crazy, basically. So if we get in like a full-blown war with Russia or China or anything like that, then you're going to see crude oil spike dramatically. And you could also see a scenario. I think a lot of the banks have dropped a lot of their adherence to only investing in renewables, partially because of the issues with the price related to minerals and stuff. So I feel that, like, you know, a minimum $3.50 gas is here to stay for quite a long time. And I think the asterisk to that is if we really have a full-blown financial crisis and that goes into more than just certain assets. So if it's housing, financial markets, jobs, you know, there's mass layoffs, then you're going to probably see $2 gas. But it's
so you think the only way gas will go down in price is if there's a financial crash?
Yes.
Okay.
Yeah, I would say that. And basically consumption goes down dramatically.
Okay,
So it's,
well, in that case, wipe away my previous prediction. We keep it in the same episode. So,
well,
yeah.
And like, I think that the level of natural gas price is a lot easier to predict right now, just because there's been a lot of underinvestment in it. And there's been a lot of dislocation in the market with basically the US trying to replace European gas and a lot of different factors. So I feel kind of like the price certainty for natural gas is a lot more set in stone than gasoline, which I would say is more driven by consumption factors and also people's disposable income to travel.
Yeah, the only thing I can honestly think that would keep people from consuming more gasoline is if we don't have enough cars to pump the gasoline.
Yeah. So like the IEA is predicting higher consumption next year. So pretty much everybody is predicting higher consumption in 2023 than 2022. And there's not necessarily as big of a uptick in supply and activity to really make up most of that. So I think there's kind of a limited downside. That's my opinion. Maybe wrong, and the market is known to run in certain areas pretty quickly if there's a good narrative story along it, rather than necessarily fundamentals.
Right.
So we'll see.
Okay. Let's move to outside the U.S. for a little bit. So, if I'm reading this correctly, the EU, the European Union, has now been. If you would like to learn more about the New Next podcast, find us at thenewnextpodcast.com, where you can suggest a topic you would like for us to cover. If you enjoyed what you heard, share the podcast, tell a friend about it, or rate us with 5 stars.